Hello everyone, myself Deepak Gupta, logging on this platform of College Dekho Learn, and we will continue our journey on the financial capital, financing decision or the capital structure decision, where we will be continuing the relationship between the value of the firm and the leverage. So, as discussed earlier, the decision regarding your leverage, that is the combination or the proportion of debt and equity. So more is the debt, more is the leverage. Effectively, it is financial leverage, but normally we use the word leverage only because ideally financial leverage or the leverage denotes the quantum of debt, the proportion of debt which has been used in the overall funding of the company. So what we were talking in the earlier sessions on the similar topics through the net income approach and the net operating income approach, commonly known as NI approach and NOI approach, that the capital structure, that is the leverage, will decide the cost of capital, the overall cost of capital, and that overall cost of capital, as discussed earlier, was given by the formula overall cost of capital KO, that is WDKD plus WEKE, and this WD denoted the weight of the debt. It means high leverage denoted high WD. So we linked the capital structure decision with the leverage to the cost of capital and try to ascertain its impact on the overall value of the firm, that is value which should be equal to the number of equity shares into the market price of the share per unit. So we have already stated that some approaches, some thinkers believe that this capital structure decision, this leverage may affect the KO, but it does not affect the overall value of the firm. And we use this concept of NOI approach. And in that earlier session, we stressed that the capital structure, that is the leverage, will affect the KO. And as the size of the debt leverage increases, the KO decreases, and hence the value of the fund must increase. But now today what we are up to, that we will be discussing the Modi-Jilani Miller approach, that is MM approach. और ये मोदी जिलानी बहुत पुराना है, इसके आज के मोदियों से कोई लिंक नहीं है, प्लीज ठीक है, तो आप प्लीज डोंट अंडरस्टैंड कि मोदी जी यहाँ भी आ गए, बट this is Modi-Jilani Miller approach, that is why commonly known as the MM approach, which links again the relationship between the capital structure, between the cost of capital and the value of the firm, but it undertakes the view of the NOI approach, that is effectively the capital structure, that is the leverage, will not affect the value of the firm, but it is with its own inherent assumptions. So I just said that it has certain inherent assumptions and justifies the net income approach or the net operating income approach. Okay? But instead this net income, I should be writing here that it should be net operating income approach. So this is, please, I'm just avoiding it, that will be NOI approach. Why? Because like NOI approach, it will disregard the relationship between the capital structure and the value of the firm. It means it will say that the capital structure does not affect the value of the firm, but it has a specific approach of its own, which is quite different from the NOI approach. And that is why, to understand properly the MM approach, we will have to understand what are the assumptions on which forms the basis to create this MM hypothesis, and on those assumptions basis we will try to understand the actual theory, and we will also understand that this theory is based on a basic exercise known as arbitrage. So we will understand what is arbitrage and how in this theory of MM hypothesis that arbitrage works, and how this arbitrage is benefiting, which is prompting the concerned parties to enter into arbitrage, and what are the effective formulas that will be used to calculate the value of the firm. And if you will see the formula, then we will have this word VU, and we will have this word VL. So this L denotes levered and this U denotes unlevered. So actually the VU is value of unlevered firm, and this VL will denote the value of levered firm, the value of the levered and the value of the unlevered firm. So why it is so, that we'll be just discussing in our assumptions part. So if I go to the assumption, so if you just support this funda here, that the approach only gives a more practical justification for this non-linkage through the arbitrage process. It means it has underlined that the use of debt, that is the capital structure, will have no impact on the market price, that is the value of the firm. So we will carry forwarding not this NI, this is just a miss of the word by the operator, that it is actually net operating income approach, ये यहाँ enter होगा. So we will be justifying the NOI approach, that is the value of the firm does not affect the market price, or the market price is not affected by the leverage, but we will have a different, more pragmatic, more practical approach through this overall process of arbitrage. So if I come here again, that if you see here that the assumptions are to be understood in entirety. The first and foremost difference is that there is no difference between the personal and the corporate leverage. So as just I told you, that leverage denotes the quantum of debt, the size of the debt. So if we say the firm is levered, it means the firm is using debt. If we say the firm is highly levered, it means we are saying that the firm has high quantum of debt. So the debt can be taken either by the company or by the individual. So practically, when the company takes a loan, because the quantum is high and because the rate of interest can be different because of the security issues, so ideally the loan taken by the individual in personal capacity and the company in corporate capacity is different, but they are assuming here that there is no difference between the personal and the corporate leverage. It means the rate of interest is same. It means whether the loan is taken by the company or it is taken by the individuals concerned, it will have no effect whatsoever on the overall scenario. Secondly, the capital markets are perfect. What it denotes, that ideally capital markets, that is which denotes the, or which shows the price of the share in the secondary market, they are affected by so many factors, and even certain hearsays or the unaccounted news also affect the value of the firm, which should not be the case ideally. It means the markets should show the price of the equity only based on the technical and the fundamental basis, and there should not be any effect of unjustified news on the price of the share. But that may not be the case always. So that is why we are assuming that the markets are perfect and there is no impact of any useless news on the price of the share. And therefore, this perfectness of the capital market is possible only if the investors are fully and freely informed. It means the investors are not acting in panic and they only act when they justify the decisions or the news on their own. Thirdly, the securities are infinitely divisible. It means you can always break the shares in as much parts as you possible. तो shares की quantum बढ़ती जा सकती है अगर आप shares को किसी भी तरीके से split करें, तो उस पर कोई limitations नहीं है, उस पर कोई guidelines नहीं है, that assumption है. और एक फोर्थ assumption है जो हम लोगों ने अभी तक इस तरह की हर थ्योरी में दिया कि हम टैक्सेशन को इग्नोर करते हैं, बिकॉज इंडिया में डेप्ट के ऊपर टैक्स की सेविंग है, और डेप्ट के ऊपर टैक्स की सेविंग होने के कारण जो कॉस्ट ऑफ डेप्ट इट इज ड्रास्टिकली रिड्यूस्ड. सो इट बेसिकली शिफ्ट्स द ओनर्स in the favor of the debt. So more and more companies are using debt to save this tax, and it just aborts the overall concept of this relationship between the capital leverage and the value of the firm. And this is not the case in whole of the world. It is not possible कि पूरे वर्ल्ड में इंडिया की तरीके से इंटरेस्ट ऑन डेप्ट के ऊपर टैक्स की सेविंग हो. What has been told that ideally we ignore that there is any kind of income tax, so that we are able to understand the leverage without any inherent tax savings for the debt. So based on these assumptions, if we create our theory, so what is happening, that approach underlines the non-effect of the triangle in the leverage of a company on its value through the arbitrage process. So before we move further, we have to understand what is a arbitrage process. So simply speaking, arbitrage is a two-pronged action where we presume that the effect of one action, it means whenever you do something there will be effect, but such effect will be contradicted by another action. It means अगर आपके एक एक्शन ने कोई पॉजिटिव इम्पैक्ट दिया तो दूसरा एक्शन नेगेटिव इम्पैक्ट देगा, या फिर अगर आपके पहले एक्शन ने कोई नेगेटिव इम्पैक्ट दिया तो दूसरे वाला पॉजिटिव इम्पैक्ट देगा, and these actions will nullify the impact of each other. They will nullify the impact of each other. So what is arbitrage? That whatever one action makes an impact is unjustified, is nullified by an equal impact in opposite direction through another action. Now how that will work in our scenario, that we will be discussing. But the basic logic that comes into our mind is that if you see from here, तो क्या लिखा है, that arbitrage process, which is actually, I just show you what we are talking, that arbitrage process, which is actually two related actions taken simultaneously, ठीक है, so that the same benefit can be achieved. सेम बेनिफिट कैन अचीव का मतलब क्या है कि एक का जो इम्पैक्ट दूसरे से नलीफाई हो गया, तो जो पुराना एक्शन था, यानी कि पुराने एक्शन के लेने से जो नुकसान या फायदा हुआ वो दूसरे एक्शन ने खत्म कर दिया, तो आपका सब कुछ सेम रहा जैसे कि पहले था. सो बिफोर आई मूव ऑन, वी हैव टू अंडरस्टैंड दैट दिस Modigliani approach has one more assumption, that there will be either levered firms or unlevered firms. So it assumes that either there will be levered firm or there will be unlevered firm. So there is nothing like partial. यानी कि unlevered firm में value of the equity will be equal to the value of the firm. Whereas in the case of levered firm, the value of the firm will be equal to the value of the equity plus the value of the debt. So V will be equal to E plus D because we have ignored the tax. But slowly with the period of time, if we ignore this assumption of taxation and we involve that there is a tax saving on the debt, then we multiply D with the T. That is, because of the T, the impact of debt is reduced. It means because of the resultant tax savings on the interest, the effect of the D has been reduced. That is why we are showing it with D multiplied by T. So what is here happening, कि अगर हमने पुराना फंडा नोटिस किया था तो वहाँ ऑपरेटिंग प्रॉफिट EBIT था, जिसमें से हम लोग I माइनस करते थे तो हमारे पास EBT बचता था. तो एक अनलीवर्ड फर्म में इंटरेस्ट नाम की चीज जीरो है, and EBIT hence will be equal to EBT, and on this EBT we pay tax, and that is what remains earning after tax, and this earning after tax is the earnings available for the equity. So therefore this V, which was equal to E, which should be equal to EBIT minus interest, that is EBT minus tax, तो इट इज एक्चुअली में EAT, और जिसको हम लोग लिख सकते हैं EBIT 1 minus T, that is after reducing the tax liability on the profit and as multiplied by the overall cost of capital, and here the KO will be equal to KE. So that is what becomes the value calculation formula for an unlevered firm. For an unlevered firm. And therefore, in the case of this levered firm, the value should be the value of the unlevered firm plus dt. So we bring it here, and that is why जितना यहाँ से टैक्स कम हुआ उसका इम्पैक्ट यहाँ ऐड करके उसको हमने नलिफाई कर दिया. So how this theory works, that if we compare an unlevered firm and if we compare this levered firm, with an unlevered firm, so it starts with the basic assumption. It starts with the basic assumption that because the levered firm will have lesser cost will result in high earning per share for the company, and as per the objective of wealth maximization, higher EPS will result in high market price of the share. So if on this aspect it will be reversed, that because of higher cost there will be low EPS, and because of the low EPS there will be low market price. So what is happening here, that we are comparing two firms which are absolutely same in all their financial implications, यानी कि उनकी growth prospects, उनकी profitability, उनकी past history, उनका sector, सब कुछ same है. So we are comparing the value of the two firms which are absolutely similar in all other aspects, whether it is regarding their nature of business, whether it is regarding their past performance, whether it is regarding their current profitability, whether it is regarding their future growth prospects. So it means they are all absolutely similar. Therefore, their price has to be similar, except that one is levered and the other is unlevered. So this theory starts with this assumption that because of the lower cost, this levered firm will have a higher market price as compared to the unlevered firm. So we are starting with this contra theory that in spite of similarity in every aspect, if the two companies are similar in same aspect, I am repeating this again and again, that in spite of two companies on similar platforms, similar in every aspect except the leverage, the levered firm will always have higher market price in compared to the unlevered firm. But what it means for the shareholder. So if I am a shareholder in this company which is levered known as X Limited, and I am seeing this another company Y Limited, so I see it as this way कि जो पोजीशन X कंपनी की है वही Y कंपनी की है, लेकिन X मार्केट में प्रीमियम पे ट्रेड कर रही है और Y मार्केट में प्रीमियम की जगह डिस्काउंट पे ट्रेड कर रही है. तो मैं एज ए इन्वेस्टर अपने शेयर्स को शिफ्ट करूंगा, यहाँ के शेयर्स को बेचूंगा और यहाँ के शेयर्स को बाय करूंगा. और इस आर्बिट्रेज हुआ ना, टू कॉन्जिक्यूटिव एक्शंस हैं, तो ये आर्बिट्रेज हुआ और इसका इम्पैक्ट ये हुआ कि शेयर बेचने से जो मेरे एक कंपनी के शेयर गए वो दूसरी कंपनी के शेयर खरीदने से आ गए. तो बेसिकली मेरे पास सिमिलर कंपनी के शेयर्स आ गए, बस फर्क था कि पहले एक्स था लेकिन अब वाई है, लेकिन दोनों कंपनियां एब्सोल्युटली डिफरेंट हैं. और ये मैंने क्यों किया, क्योंकि मैंने महंगे शेयर बेच के सस्ते शेयर खरीद लिए. तो इस आर्बिट्रेज से मुझे कुछ प्रॉफिट हुआ और इस प्रॉफिट के प्रॉम्प्टनेस ने मुझे आर्बिट्रेज करने का मजबूर किया. लेकिन इस आर्बिट्रेज के कारण मेरे को प्रॉफिट बुक तो हुआ, लेकिन मेरी शेयर होल्डिंग सेम टू सेम रही, सिवाय इसके कि पहले कंपनी एक्स थी और अब कंपनी वाई है. Now how it implies कि selling the shares will create supply of equity or buying the shares will create demand of equity of this company. तो बेसिकली इस आर्बिट्रेज से इक्विटी एक्स की सप्लाई आएगी और इक्विटी वाई की डिमांड आएगी. एंड द बेसिक इकोनॉमिक्स सेज कि सप्लाई विल हैव अ नेगेटिव इफेक्ट ऑन द मार्केट प्राइस ऑफ द एक्स शेयर एंड द डिमांड क्रिएशन विल हैव अ पॉजिटिव इफेक्ट ऑन द मार्केट प्राइस ऑफ द वाई शेयर. सो जो प्राइस यानी कि प्राइस जो ऊपर बढ़ा था बिकॉज ऑफ लो कॉस्ट, वो गिर जाएगा बिकॉज ऑफ द सप्लाई. और जो प्राइस गिरा हुआ था बिकॉज ऑफ हाई कॉस्ट वो बढ़ जाएगा बिकॉज ऑफ डिमांड। तो अल्टीमेटली दिस arbitrage will continue till the price of x is equal to the price of y, and when the price becomes equal the arbitrage will stop, and hence what the point is that the arbitrage will nullify the effect of any price difference between the two similar companies due to leverage, and this arbitrage will stop only if the prices are similar. So this theory implies कि अगर दो एक जैसी कंपनियों में लीवरेज के कारण अगर कोई छोटा मोटा प्राइस डिफरेंस है भी तो आर्बिट्रेज और शेयर होल्डर्स की प्रॉफिट बुकिंग के कारण वो सारा का सारा खत्म हो जाएगा। और जब वो आर्बिट्रेज तभी खत्म होगी, वो आर्बिट्रेज एक जस्ट अ मोमेंट, और वो आर्बिट्रेज तभी खत्म होगी जब शेयर का प्राइस इक्वल हो जाए। तो अल्टीमेटली दो सिमिलर कंपनीज के शेयर के प्राइस सिमिलर रहेंगे, दो कंपनियों के शेयर के प्राइस सिमिलर रहेंगे अगर वो सेम प्लेटफॉर्म पे हैं, और उनके कारण अगर लीवरेज के कारण कोई प्राइस डिफरेंस भी है तो वो आर्बिट्रेज खत्म कर देगी, एंड हेंस वी कैन से that the capital structure, that is the leverage, will not affect the market price of the share, and if it affects initially then it will be written off through the process of arbitrage, and two similar companies with everything similar on their part on performance point of view, and the difference only because of the leverage will be written off through this beautiful process of arbitrage. So I hope this session was of help for you, and therefore before I close on, so you will find दैट प्रॉफिट फ्रॉम द आर्बिट्रेज क्या है कि आपकी इन्वेस्टमेंट सेम है। अगर आप इसको यहाँ देखोगे तो आपकी जो प्रॉफिटेबिलिटी है वो सेम की जगह बढ़ गई, क्योंकि आपने करा क्या, एक कंपनी के शेयर बेच के दूसरे कंपनी के शेयर ले लिए, जबकि इन्वेस्टमेंट सेम टू सेम है, सिर्फ आपका होराइजन एक्स से वाई पे शिफ्ट हो गया। और अगर आप इन्वेस्टमेंट को कम कर रहे हैं तो प्रॉफिट कम हो जाएगा, या ये कहो कि जो प्रॉफिट पहले था वही प्रॉफिट आ जाएगा लेकिन आपकी इन्वेस्टमेंट कम हो जाएगी, क्योंकि शायद आपने एक्स के शेयर तो यानी कि आप एक्स के बेचकर वाई पे जा रहे हो, तो अगर एक्स के महंगे बिके और वाई के सस्ते थे तो आपने जितने शेयर एक्स के बेचे उतने में वाई के ज़्यादा आ जाएंगे, तो फ्यूचर में प्रॉफिट ज़्यादा हो जाएगा। तो इन्वेस्टमेंट सेम है और प्रॉफिट बढ़ गया। और दूसरा एस्पेक्ट क्या है कि जब आपने एक्स के शेयर महंगे बेचे और वाई के शेयर सस्ते थे तो आपने सेम अमाउंट जो एक्स में इन्वेस्ट कर रखी थी वो वाई में आ गई, और जो एक्स्ट्रा प्रॉफिट आया वो आपने विड्रॉ कर लिया। तो आपने प्रॉफिट तो विड्रॉ कर लिया लेकिन अब आपकी इन्वेस्टमेंट पहले के मुकाबले कम हो गई, और फ्यूचर में जब इनके ग्रोथ प्रोस्पेक्ट सेम है तो जितना प्रॉफिट एक्स से आएगा उतना ही वाई से आएगा। इट मीन्स आपकी इन्वेस्टमेंट पहले के मुकाबले कम हो गई जबकि प्रॉफिट पहले जैसा ही आएगा। तो यू कैन टेक इट फ्रॉम वॉट एवर परस्पेक्टिव यू वॉन्ट टू सी, बट what it implies that the arbitrage will prompt the investor to earn more profits, or it will be getting similar profits on lesser investment, and that is how arbitrage justifies the non-relationship between the leverage and the value of the firm. And I again, if I just underline it, that what I told about the leverage is that you sell the shares of the levered firm and you buy the shares of the unlevered firm, and that is the two steps of the arbitrage. As we have discussed, that arbitrage is a combination of two actions which nullify the impact of each other in a contrasting manner. So I hope this session was of help to you, and I believe that we have discussed almost all theories which justify the impact of the relationship between the leverage and the value of the firm. In addition, there is one more theory which is normally not so important in the paper, where we use the word traditional approach. We have already discussed net income approach, we have already discussed net operating income approach, we have already discussed, I am just repeating, हमने फर्स्ट सेशन में NI अप्रोच डिस्कस किया था, उसके बाद उसके नेक्स्ट सेशन में NOI अप्रोच डिस्कस किया था, और उसके बाद हमने थर्ड सेशन में आज MM अप्रोच डिस्कस किया। and they all sessions were on financial management, capital structure theories. जो एक थ्योरी और है जो इफेक्टिवली एग्जाम्स में इतनी इंपॉर्टेंट नहीं है, बट जस्ट टू कवर द टॉपिक, तो मैं इसको आपको नटशेल में बता रहा हूँ कि इसकी जो ऑपरेशंस हैं इट इज़ मोर और लाइक सेम एज वी स्टडीड द नेट इनकम एंड द नेट ऑपरेटिंग इनकम अप्रोच. सो if we recall those theories, that on the x-axis we denoted the leverage and on the y-axis we denoted the cost, and we always said that the KD was less than KE. So this theory says that like net income approach, both KD and KE will remain constant but only to a particular quantum of leverage. यानी कि जीरो से लेकर अगर आप लिवरेज बढ़ाते जाओगे तो अगर आप एक पर्टिकुलर क्वांटम ऑफ लोन तक अपने डेप्ट को रेज करोगे तो केडी और केई पर कोई फर्क नहीं पड़ेगा. बट इफ यू इंक्रीज योर लीवरेज आफ्टर दैट पॉइंट, then the risk of the equity will increase and hence the KE will increase, as was discussed in the NOI approach. But in addition, this approach also said that along with the increase in the risk of the equity, the risk of the debt will also increase because of more and more of debt, as the fresh financiers will believe that company is already under so much debt that there is a risk to our new funds, and therefore they may be providing funds now at a higher rate of interest. And so as a new part of this theory, the KD will also increase. So what will happen here, that till the KD and the KD and the KE was constant, the KO will go down, and when both are increasing, then obviously the KO has to increase. So what is happening here, that this is the point where the KO will be least. And which quantum is this? They said there is a concept which is created fresh in traditional approach, that there is a concept of optimum leverage. Means it denotes कि यहाँ KO least है. अगर आपने इससे कम लोन लिया तो भी KO ज़्यादा है, इससे ज़्यादा लोन लिया तो भी KO ज़्यादा है. तो अगर हर कंपनी चाहे तो वो ऑप्टिमम लीवरेज अचीव करे, और ऑप्टिमम लीवरेज के टाइम पर KO लीस्ट होगा और जो वैल्यू है वो मैक्सिमम हो जाएगी. तो ये तीनों के तीनों जुड़े हुए हैं कि ऑप्टिमम लीवरेज पर वैल्यू मैक्सिमम है और KO लीस्ट है. इट मीन्स आपकी वैल्यू स्टार्टिंग में बढ़ती जाएगी, इंक्रीजेज अर्लियर, बट उसके बाद वैल्यू जो है वो आपकी गिरनी शुरू हो जाती है, डिक्रीजेज लेटर, और बीच में क्या आती है, मैक्सिमम वैल्यू. तो मैक्सिमम वैल्यू अराइव एट ऑप्टिमम लीवरेज. So this traditional approach takes a new stand which is different quite from the NI and the NOI approach. So now we are finished. We have done all the approaches that relates leverage with the value of the firm. So hope this session was of help.